Welcome to All Bookkeeping and Taxes. We make managing your small business finances simple and stress-free. That's why we're here to assist you with everything from bookkeeping to tax preparation and advisory services. Today, we're going to talk about what happens when you fall behind on your business taxes. Staying on top of your tax obligations is crucial because missing deadlines can lead to unexpected bills from the IRS. You're not alone either. More than 7 million Americans miss their tax filing deadlines each year. The IRS takes unpaid taxes very seriously, making back taxes an issue you can't afford to ignore. Unfortunately, if you don't take action, the situation can escalate quickly. If you're behind on your business taxes, we'll guide you on what to expect and how you can move forward. While some business owners struggle with employment and sales taxes, today, we'll focus on the most common issue, income taxes. Falling behind on business taxes can mean different things, and every case is unique. However, for this discussion, we'll keep it simple and focus on two common scenarios: not filing your taxes, not paying them, or in many cases, both. The consequences of falling behind on taxes. If you fall into one or both of these categories, you'll first face penalties, both for failing to file and for failing to pay. The size of these penalties depends on how much you owe and how long it takes you to file or pay. If you don't pay your tax bill on time, the standard penalty is 0.5% of the unpaid amount per month. If you don't file your tax return by the deadline, assuming you haven't requested an extension, the penalty is significantly higher, 5% of the unpaid amount per month. Both penalties can accumulate up to 25% of the total tax owed. Since the failure to file penalty is much larger, it maxes out after 5 months. If both penalties apply in the same month, you'll be charged a total of 5% to 4.5% for failing to file and 0.5% for failing to pay. Once the 5 months pass and the failure to file penalty stops, the failure to pay penalty will continue at 0.5% per month for up to 45 months, unless you pay the full amount before then. Pro tip: since the failure to file penalty is much higher than the failure to pay penalty, even if you can't afford to pay, always file your tax return. That way, you can avoid the most severe penalties. Some penalties may be waived under specific conditions. We'll cover that in a later video. Interest charges on unpaid taxes. In addition to penalties, the IRS charges interest on unpaid taxes. The exact rate fluctuates based on federal interest rates, but currently, it's around 3% annually. Interest accrues daily and applies to the total balance, including penalties. A real-world example. Let's say you owe $10,000 in taxes and it's been 10 months since the deadline. You haven't filed your return or made any payments. Here's what happens. For the first 5 months, you accumulate a 4.5% failure to file penalty, $450, and a 0.5% failure to pay penalty, $50 per month. For the next 5 months, you only accrue the 0.5% failure to pay penalty, $50 per month. Your total penalties after 10 months would be $2,750, bringing your total owed amount to $12,750. Interest is then added on top, increasing your balance by at least another $300, meaning you could end up owing over $13,000, a 30% increase from your original tax bill. What if you haven't filed but don't owe anything? If you haven't filed for the last few years but don't owe any taxes, there's good news and bad news. Good news: you won't be charged failure to file penalties. Bad news: if you're due a tax refund, you lose it if you don't file within 3 years. The IRS estimate, substitute for return. When the IRS tries to determine how much you owe but you haven't filed, they use a substitute for return, SFR. This estimate is based on available public records, such as bank records, wage reports, and contractor payments. However, there's a major problem. The IRS doesn't include deductions or credits, which means their estimate is usually much higher than your actual tax liability. Since penalties and interest apply to this inflated amount, you could owe much more than necessary. That's why filing your tax return is crucial. It allows you to claim your deductions and credits, reducing your overall tax burden. What to do if you can't pay? Owing more than you can afford is a stressful situation, but there are several ways to handle it. We'll cover those options in detail in a later video, but here's the best first step. File any missing tax returns. By doing so, you 1. Show the IRS that you actually owe less than their estimated amount. 2. Stop failure to file penalties from growing. 3. Improve your chances of negotiating with the IRS. If you need help getting years of tax returns in order, bookkeeping is key. Proper bookkeeping ensures accurate records of income and expenses for past years, making filing much easier. All Bookkeeping and Taxes offers a retro bookkeeping service to quickly handle years of historical records, helping small business owners get back on track. What happens if you still don't pay? If you ignore tax debts despite penalties, interest, and warnings from the IRS, they will take action to collect. In the next video in the series, we'll explain exactly how IRS collections work and what you can expect if you owe them money. If you need expert help to get caught up and ready to file your back taxes, with All Bookkeeping and Taxes, we take care of everything at a fraction of the cost, so you can focus on growing your business.